Yo, what's good, guys? This is how I made $1,200 today trading the Nasdaq live in front of my mentorship students. I think we're roughly up around just a little bit over 2K on the week so far. We took 2 trades, one yesterday as well, which was another W. That was roughly around $1,000 day, and then today we hit a $1,200 day as well. As you guys can see, copy traded on the 4 accounts, and also the one yesterday was, I think, $200 day. Across the accounts, but I'd also took that one on my forex account as well, which is another 50k essentially. So yeah, roughly around $2,000 on the week so far. But yeah, let's just break down the trade that I took. I utilized the inversion TCISD, a concept founded by myself, which I'm dropping a video on this coming Sunday, so look out for that. It's going to be breaking it down and really showcasing how to use it to its full potential. More of an advanced entry technique, but very, very powerful, as you can see here, more or less used for catching continuation trades. So yeah, here's the profit on the day across 4 Express accounts, whatever. Now let's jump into the charts itself. Okay, so how did I actually come to the conclusion of taking a short today, and why did I take it where I did? Right, so firstly, the daily chart. Okay, mechanically, yesterday's close gave a bullish reverse signature to the upside, and not only that, also a continuation candle signature to the upside simultaneously. Okay, so looking at that close before today had opened up, I would have been, okay, yeah, cool, I'm bearish here, not bearish, I'm bullish here, right? Also very clear, equal highs, drawn liquidity above, unfilled gap, all that sort of stuff. Okay, so initially coming into today, I did actually want to see longs, right? Because not only that as well, we'd formed a bullish weekly cycle sequential SMT. And this was formed right there, as you can see, 1 hour TCISD, and then I took the trade during the 9 a.m. candle. As you can see, we had traded into the 1 hour TCISD as well here. So technically everything here was screaming for longs. Okay, so why did I end up taking a short? Very, very simple. Let me show you guys. So 15-minute, right? Well, not only that, but we also had YM forming a bearish weekly, right? So that was one, sort of cracking correlation to indicate lower. 15-minute, don't think we had anything. No, so we had nothing here, but what we did have was London lows and also Asia lows both intact. As well as that, we also had an NWOG right there resting above London lows, and the true day open untapped as well right there. Okay, and that was where I took profit, essentially, true day open. So we had many draws below us. Price had started displacing to the downside, right? And the main thing here that made me short, bearish, was literally the simple fact that NQ and ES both ran below Q2 lows right there when they did. Okay, so I wanted, for my bullish scenario today, I wanted to see a bullish 90-minute sequential SMT form on the lows between Q2 and Q3. That would have confirmed to me that we're going to go higher, right? Now, we do actually still have a bullish 90-minute sequential SMT between Q2 and Q3, but why did I take a short? The reason is because YM was just doing its own thing. So whenever YM's completely out of sync, as you can see, it was ripping higher. NQ and ES was more or less in sync. So what I'm going to do then is only mainly focus on NQ and ES themselves as sort of more or less like a duo instead of looking at the triad, okay? So it's more or less looking at ES and NQ alone. So if the 90 had formed between NQ and ES, then I would have been like, okay, cool. I'm waiting for the 5-minute TCIST and I'm going to take a long, right? But as you can see, both ES and NQ ran below that Q2 low right there at 9:30. Okay, not only that, but we'd also confirmed the bearish 90 via the 5-minute TCISD, which showed no sign of rejecting to the upside at all. And then this candle here, this 5-minute candle, right, closed as an inside candle. So what does that usually mean? The following candle will likely either take the high and then the low, or expand aggressively to one side. Okay, this candle was kind of mid. This is the candle where we entered short. Reason being, again, because we still had this inside candle low intact and these equal 5-minute lows. So I wanted to see these candles open up and then just rip to the downside, and we was very close to our true day open, our London lows, our MWOG. So more or less thinking, what's it called, like using the intuition, like we're more closer to the lower drawn liquidity than the higher one. So then what did I do then? Entry model, obviously that 9 to 10:30 window, the 90-minute TCISD model. In this case, dropped to a 15-second, which could be quite a lot for quite a lot of people, but I do trade it pretty often because there's no entries on the 1 minute or anything. Now this looks messy. I avoided all of this because I waited for a bearish inversion TCISD. Okay, as soon as we form one, which we form one here, right? So all it is as you can see, you can just about see that. That's a bullish TCISD candle. Closure above, boom, confirms longs. Okay, so we're still bullish, still bullish, still bullish. Soon as we close below the TCISD candle, this is what inverses it. It invalidates the bullish TCISD. So what does that mean? It then becomes a bearish inversion TCISD to the downside. Okay, so not only did we have draws below us, we invalidated the bullish TCISD, forming a bearish one, an inversion to the downside. So as soon as this candle closed, I waited for price to trade back into the bearish inversion TCISD, right? Took my entry right around here. Stop loss was on this high, okay? So not on the invalidation, I would have preferred the swing high, but it was just too much risk. So this one here, okay? And because I didn't have it on the invalidation, I went break even pretty quickly. So as soon as this candle closed, I just moved to break even. And I was like, okay, I'm just gonna let it run to that true day open, which was roughly, you know, around about here. And as you can see, it ended up hitting very, very nicely. So drawn liquidity is below us. We invalidated the bullish 90 technically if we're looking only at NQ and ES, because YM was not in sync, so I don't really care what YM was doing at that time. So draws on liquidity below us, invalidated the bullish 90, so closed below it on both NQ and ES. Then we, you know, form bullish TCISDs. What do? Wait for those to get disrespected, forming a bearish inversion TCISD to the downside. Enter the retest, stop on the recent high, break even pretty quickly, and then let price just run towards our draws on liquidity. I could have left it run a little bit longer, but again, this was more than enough RR for me. It's like 3-4 RR at the initial stop loss, like roughly around 3 RR. So yeah, there was just, you know, really no reason to let it run. I was very content with this here. And then yeah, as you can see, it did keep going down to those Asia and London lows, I believe. Then we got a bullish TCISD. Then that's when we got the reversal higher. Okay, so yeah, very, very simple, repeatable. Again, just that 90-minute TCISD model, which I now incorporate inversion TCISDs for my actual entry type. So regular TCISDs, as you guys know, and then also inversion ones, which don't worry guys, video coming on Sunday. I recorded it today. I'm going to edit it, drop that on Sunday. Full breakdown of the inversion TCISD, the ITCISD, and also we'll be updating the TCISD indicator, which you guys can get below in the description. And we'll be adding inversion ones to that very shortly as well. So that way you guys can really use this entry model and just map it all out on the charts for you automatically, and then just take your entries as soon as it gets alerted, essentially. Okay, so yeah, with that being said, very good week. Probably going to call it there. You know, I'll still probably trade tomorrow, but probably won't take anything, more or less just observing price, because went 2 for 2 on the week and we are in December, so I will happily take that. Like I said, up just a little bit over $2,000 this week across all of the accounts. So yeah, can't complain. Nice way to end off sort of December. We'll see what we can do in the next couple of weeks, but I'm probably going to tone down on the risk and, you know, just chill out a little bit, more or less maybe just stack up some more funded accounts for the new year. But yeah, with that being said, hopefully you guys did find this useful. Make sure to check out my socials down below, the free Discord, both the indicators that are used on the chart, applications to apply for my one-to-one mentorship, and also a link down below to a free live masterclass that I'm hosting on the 17th of December, which you guys can apply for and join completely for free. Okay, so with that being said, hopefully you guys do enjoy the rest of your days, and I will see you guys on Sunday for the ITCISD video, one of my best videos I've dropped in a while, and it will change a lot of your guys' tradings for the better. So yeah, enjoy the rest of your day and good trading.